Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Cybersecurity Awareness Month, which takes place every October and now in its 19th year, is a collaboration between government and private industry to raise awareness about digital security and empower everyone to protect their personal data from digital forms of crime. Joining us for this segment, we have Issakainen, ETF strategist with First Trust Advisors, to discuss why cybersecurity revenue is more resilient than other parts of the tech sector. Ryan, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. It's great to be with you.
What has been the major driver for the technology sector to be under pressure all year?
Yeah, I mean, it has been quite a year for most technology companies. And I think, interest rates certainly moving up, high growth areas of the market getting punished. And I think there are certain areas of technology that are vulnerable for an economic slowdown. For example, if you think about, spending on the latest smartphone for your sales force or something like that, you might push that off if there's a period of economic slowness. You may push off investments in advertising. You may reevaluate your workforce. There are certain things that companies will do that could impact technology companies. And I think the reality of that has had an impact on those companies.
Why do you believe that cybersecurity is more resilient than other parts of the tech sector?
Yeah, I think it comes down to the fact that our economy, our world has become so much more digitally interconnected that we are at a point now where cybersecurity isn't some sort of discretionary expense that as you're sitting around with your management team and figuring out in a period of potentially recession or economic slowness, at least, how you're going to cut costs. I think all those other things I mentioned are on the chopping block potentially, but one area that's not is you're spending on cybersecurity. It's not discretionary. It's something that everyone has to do because the reality is, that the cyber crime side of the business is not cyclical. There are cyber criminals that increasingly have more sophisticated ways to attack and all sorts of ransomware that they can install, and you have to protect against that. So I don't think that the revenue will come under pressure like some other forms of technology could.
How are geopolitics playing into cybersecurity spending?
Well, the war that's ongoing over in Ukraine has certainly had an impact, and I think a boost for the awareness and the need to spend, because as we all know, unfortunately, some of the areas in play, particularly in Russia, are well known in perpetrating cyber attacks. And so I think there are certainly concerns, and there have been attacks that government agencies, that companies, and even individuals are aware of, and they therefore understand they need to boost their spending.
What sectors are you seeing the most demand from when it comes to cybersecurity spend?
It's interesting because there was a time when you would have expected the usual suspects to be online banking and maybe online retail, all of that online transaction sort of business. But we're at a point today, as I noted, the economy is so digitally interconnected that there's really no industry that's not touched by the need to invest in cybersecurity to secure their digital ecosystem. And I think that's part of the growth opportunity, because there are all sorts of businesses that recognize that they need to continue to not only invest, but increase their investments as the sophistication of the attacks increases. And there's a lot of intellectual property that is at risk for those that underinvest.
So Ryan, are investors buying into the resiliency of cybersecurity? How exposed are they to the theme?
That's another interesting part of this theme as a thematic investment. When I look at the average weight of our ETF, CIBR, and the underlying holdings in the broader indexes, it's only about 1.5%. And what that tells me is that most investors have very little exposure to the companies that will benefit from this really high growth theme that I think, again, will be resilient in the months and years to come.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.